Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again at the gold market. So today we once again have taken a look at the fundamental background of the gold market. So lots of interesting stuff there. So more and more signs appears, at least by our view, that where might be standing in a long-term upside spiral, inflationary spiral, and current drop to the 5% is just a temporal relief, which is some kind of the pullbacks and retracement in the longer-term upside inflationary trend. Rather, some fundamental background exists. So particularly speaking, we have mentioned the one which is a drop of the global productivity and production using capacity. But other words speaking, the population is rising while the production is stagnating, and this background and the fragmentation of the global economy, losing of the value by the global reserve currency, all this plays in favor of devaluation of the fiat money. So this is the global and long-term reasons, but there are some specific reasons also exist inside of the United States in the geopolitical arena. So some of them we have discussed yesterday, mostly economical in the Forex report, so you could read it. And this in this report we have taken a view on some another one. It's probably might be interesting. So there's a few interesting moments there exist. I think that you get really you will enjoy with this reading. So on the technical side, and just to complete the idea of the fundamental report, so in the long term we do not see yet any signs that demand for the gold should start dropping. So we think that in the longer term, gold still stands on the long-term trend, but in the shorter term, at least within the May and June, gold could get some relief. There are some background is fundamentally because everybody expects some actually changing of the Fed policy, become it more dovish. 25 basis points move, it's already priced in the Fed performance. So it will be some informational vacuum until June meeting, I suppose. Over the 2 months exist here that gold could be driving by its own. Second, purely technical moments, as we already talked in the last few weeks, that upside potential in the short term of gold is limited. It's just because gold overbought on a weekly and monthly chart, and the first fruits you already see on Friday. As we said on Friday, we warned that mostly upside journey with this butterfly to the 2055 target is done. Do not consider currently new long positions if you trade on the daily chart, on the high time frame charts. If you consider long positions on the lower time frame, take the profit around 1260, 1266, which is actually previous top and a weekly and monthly overbought area. So this technical background also stands in favor of some retracement. It doesn't mean that trend is over. It doesn't mean that this market is breaking the context. It's just we're just now in a moment of some shift to larger scale. So previously this was our scale. With the big retracement here, for example, I don't know, maybe 1955 area, we're turning to the larger bullish scale. So now we will consider this larger performance with some kind of the ABCD maybe or something of that sort. So this is just increasing of the scale of the trend. So this is normal, natural, absolutely natural performance. But meantime, on the beginning of the next week, we are focused on this pullback. So as we warned on Friday, as you can see, the butterfly target, grabber on the top, bearish divergence in the MACD has worked nice. So as you can see, the pullback was relatively strong. Grabber suggests taking out of these lows around 1980 area, and supposedly we could pretend on some, I don't know, maybe hand and shoulders pattern. So for example, on a 4-hour time frame chart, it would look like this. We are dealing with the 127 head and shoulders. Neckline probably will be slightly sloped. We will see, but it doesn't matter actually, because the most important thing for us is the top of the right arm, where we could consider tactical short position. We're not dealing with the not intend to take the short position in advance for actually long-term performance. This is just tactical basis, because on the daily chart we have bearish trend right now, and we trade gold onto the downside on the intraday charts. This is absolutely normal approach. So it means that around 2025 or 2020 is where it will be supposedly the top of the right arm. This potentially suitable area to consider taking the short position. Well, some minimal risk exists that market could still move higher to the 1618 extension. This was a butterfly, if you remember, that we traded last week, and hit 2055, 2060 area. But probably we could recognize it in advance if we will see that gold start messing around with the hand and shoulders. If something will goes wrong, market will start climbing back to the head, sending us some warning signs that maybe it's not everything good with this head and shoulders. We'll recognize this. If we will get it, well, in this case, yes, we will consider probably another upward action, taking a long position maybe, but this is too early to talk about. Let's focus on the hand shoulders and see what will happen. If everything goes well, we should get some kind of the ABCD pattern with the downside retracement at least to the 1955 area, supposed 30%, which is actually typical pullback for any butterfly. Butterfly treats as a completed if it shows at least 30% retracement. Based on this ABCD, some XOP might stand with this head and shoulders. So everything just traditionally, we see just traditional performance here, and it's going to get next week on the gold market. So that's actually what we intend to do. Let's see. And I suppose you read our weekly reports, actually carries a lot of interesting stuff in the political sphere, and some interesting moments and view on the current inflation in a bigger cycle. So it's lots of interesting information in charts. So let's see what will happen next week.